Hi again. In this lesson, we're going to finish off our audit fieldwork on the sales cycle by performing our substantive procedures. Once again, we design our substantive procedures with our audit objectives in mind, which are really just the same thing as the management assertions formatted into a statement of an objective. So for example, for accounts receivable, we have 8 objectives. 1, that all recorded receivables exist. 2, that clients have the rights to the receivables. And 3, that the receivables have been recorded, etc., etc. The extent of our substantive procedures will depend on the assessments of inherent risk and control risk, as we saw in our last lesson. Do you remember our umbrella and raincoat analogy from a few lessons ago? So for this lesson, I thought it'd be helpful just to show you some of the actual real live audit programs using the CICA's Professional Engagement Manual. And if I walk you through some of these programs and these worksheets, you'll start getting a real feel for what sort of procedures you need to do and how this all gets documented in a file. As you can see here, there's a lot of different templated worksheets that are provided to the auditor using this audit in a box sort of concept. We're going to focus in on one particular audit program, that being the one for the accounts receivable, to continue on with the example we started in our last lesson. Let's open up this worksheet and see what we've got. Okay, so here we've got this first form here, which is the audit procedures for the accounts receivable area. And let me just walk you through one of these audit programs. All the other audit programs that are out there are set up very similarly, and it's my hopes that you'll be able to transition these kind of comments and apply them as appropriate in other areas of the financial statements. So, like many working papers, the top of our working paper is documented with our client's name, the period ended, and also a documentation of our materiality level. There's an objective here which is important to point out. So notice that we're now into the audit procedures. We're now into the substantive. So it's a response to our assessed risks at the financial statement level as well as at the assertion levels that have been documented elsewhere in our file. So notice that our first instruction here asks us to record the assessed level of risks from a previous form, which was the form that we actually filled out in the previous lesson when we documented our findings after our test of controls supporting our control risk assessment. Those will get reported right here at the assessed risks at the assertion level: high, moderate, and low. At the bottom of the page, we have a table that summarizes our proposed audit approach. And so we have our basic substantive procedures. Then we'd have extended substantive procedures if necessary, if we have a lot of high-risk assessments for our various assertions. Our substantive analytical procedures that we plan, if any, and as well as our test of controls. And so this just summarizes our audit approach to this particular area. Here we are on the second page, and now we're actually getting to our substantive audit procedures. Now these are our basic audit procedures, and let's just kind of run through these to make sure that you understand or get a feel for the types of procedures that you'll be performing. Our first procedure here is an analytical procedure, and it basically says develop and document an expectation at the period end of the accounts receivable balance. So we'll compare those expectations against our actual results, and we'll investigate any significant changes or trends in the accounts receivable balance, the aging of our accounts receivable by customer, and our accounts receivable turnover, as well as any credit balances in our accounts receivable. And then finally, we'll document these findings. Number 2, we're going to obtain a detailed and aged listing of our receivables at the period end. We'll check the arithmetical accuracy and agree that to the general ledger. So notice that's going to cover off our tie-in, our completeness assertion, as well as our accuracy assertion. We're also going to check the names and the amounts to the subsidiary ledger, which covers off our completeness assertion. We'll look at the composition of the subledger balances and look for unusual items. This is otherwise known as an account scan. This covers off our existence and accuracy assertion. Then we'll ask staff dealing with the receivables about any instances where customers have been given preferential treatment, or terms of sales that have been modified, or related parties, or instances where there are internal credit limits which have been significantly exceeded. Our third procedure that we'll look at is looking at the provision for the allowance for doubtful accounts. You'll notice that a lot of these procedures are addressing the valuation of our accounts receivable. So here we're going to ensure that the allowance for doubtful accounts relates to accounts that are specific and it's adequate. So we will review the aged accounts receivable listing. We will review the entity's credit and collection policies, inquire whether there's been any changes during the period. We will review these payments subsequent to the period end, as these subsequent payments are good validation that the valuation of the accounts receivable at the period end is adequate. We will review the analysis or assumptions used in preparing the allowance for doubtful accounts, and we'll agree the bad debt accounts and related bad debt account write-offs to any supporting documentation looking for appropriate approvals. Here's our fourth procedure, and this is a very common procedure associated with the existence and accuracy of accounts receivable, and this has to do with performing accounts receivable confirmations. So our first procedure is to select a sample of confirmations to confirm with our customers. And as we discussed in an earlier lesson, there's two types of confirmations out there. There's a positive confirmation, which requires a response from our customers. And the second type of confirmation is a negative confirmation, which suggests only respond to the auditors if the balance is incorrect or does not agree with your records. The performance of the confirmation actually sends us to another form to fill out. So there's a lot that's involved in sending out and controlling confirmations. Mainly because we want to make sure that the client does not interfere and that we're obtaining independent evidence directly from the customers. So that's why there's a lot of procedures involved in the confirmation process. You'll also notice later on in this section there are alternative procedures that may be performed for situations where confirmations are unlikely to be effective. And it also provides suggestions for alternatives to performing confirmation. Next we have our cutoff procedure. So here we're largely going to be trying to document what the entity's cutoff procedures are and documenting whatever audit procedures we have performed to ensure that transactions were reported in the appropriate period. Number 6 asks us to document the transactions and ending balances with component entities or related parties. This is mainly a GAAP disclosure requirement. The other thing we need to keep in mind is that these sorts of transactions, if they are an affiliate that is either significantly influenced or is consolidated or a joint venture, that there's going to be some sort of elimination required of those intercompany transactions. Number 7 asks us to look at the translation of our foreign exchange denominated balances. Number 8 asks us to look at the classification of balances within the accounts receivable listing. So if there's any credit balances or any material credit balances, that these should be reclassified over to accounts payable for reporting purposes. Number 9 asks us to look at the accounting policies for accounts receivable and to ensure that they're consistently applied. And number 10 asks us to ensure that we have all of the relevant presentation and disclosure considered. As we move further down the page, you can see that there's an opportunity for extended tests. And again, remember, when the higher our assessment of control risk and inherent risk, the more evidence we need to gather. So there may be a requirement for us to actually do more tests of detail than what has been represented above. So these could be either tests of detail, these could be fraud detection procedures, or other tests to address significant risks. In section C, we have the substantive analytical procedures. And again, this takes us over to another form. And I'll actually jump over to this form just to show you what this form looks like. Okay, here we are at our worksheet for substantive analytical procedures. And we have an objective here that states in general terms that we've identified an analytical procedure that can be performed that will help us to identify a material misstatement. And you can see at the bottom of this worksheet that we have a sort of free-form worksheet which can be used to document our analytical procedures. And free-form in the sense that there's not a prescribed analytical procedure because the ratios and the metrics can vary between companies and between industries. So all this form does for the auditors is it asks them to document the analytical procedures that they're performing, which assertions they're trying to address, and any expectations versus the actuals, any variances, and what procedures were used to follow up on those variances, and then to document the reason for those variances. This brings us back to our accounts receivable audit procedures. In section D, you can see that we're documenting the results of our test of controls. Once again, this is reference to another form which would detail what tests of controls we performed and the results of those tests. And then finally, we have our audit plan completion section, which will be the subject of our next lesson. But basically, we're going to be summarizing any misstatements that we identified in this section of the file, any new risk factors that came to light as a result of our work in this area. And you can see at the bottom of the worksheet, it asks for the auditors to document their audit conclusions and note based on professional judgment. So the audit evidence obtained is sufficient and appropriate to reduce the risk of material misstatement to an acceptably low level. And again, it will be signed off by the preparer and then by our reviewer later on. So as you can see throughout this section, this is an example of what is called an audit program. It documents the procedures that we're performing. And it documents the assertions that we're covering off. It's reference to our other working papers that we are preparing or the client's prepared on our behalf. The PSC is who performed the specific procedure, and each time the auditor performs one of these procedures, they initial it to sign it off. And then there would be an opportunity to make some comments in the margin about the exceptions or any difficulties encountered with performing each of the procedures as prescribed by the audit program. So that brings us to the end of this lesson, and hopefully you now have a better understanding of what is included in an audit program and how specifically we actually go about auditing an account balance or a transaction cycle, such as the accounts receivable example I've used here. That's all for now, so until next time, don't stop till you get to the top. When you get to the top, don't stop.